Well, thanks so much for tuning into this very special telecast wherein we were speaking to two very eminent minds on the equity markets about how did they perceive the budget to be and how could the markets take into account the next 12 months post this budget, because while we always say that budgets are a day's game, maybe just maybe this time around is different. Nilesh Shah and Hiren Ved join in to speak about their thoughts on the budget. Gentlemen, both of you, very good evening and thank you so much for taking the time out to speak to us. Hope all is safe. But as I think Nilesh Shah was saying just a minute ago, that even if things were not all right post this budget, for somebody who's looking at the markets and the bold steps taken, things would seem to be a bit more right than usual.
Undoubtedly, Niraj bhai, this is a pro-growth budget by an Atmanirbhar Bharat. We will increase fiscal deficit to support our economy, yet not lose the path of fiscal prudence. This is the message for the rating agency. This is the message for the old way of doing business in India, where government used to dominate. Now we are saying that we will do strategic divestment, we will do privatization, we will do public-private partnership, and we will follow maximum governance and minimum government. There are many things in this budget, but I will just focus on one thing, which is laying foundation for growth in the days to come. All along, we have talked about gender balance, but our laws were not creating gender balance. Women can work in hotel, BPO, technology in night shift, but they can't work in factory in night shift. This simple limitation ensured that India's garment exports could not keep pace with countries like Bangladesh and Vietnam. Now, in this budget, there is proposal that women with appropriate protection will be allowed to work in the night shift. This one single law change can liberate our textile sector. From growing cotton to spinning yarn to making fabric, what we can earn. By converting that fabric into garment and exporting, we can earn multiple times. So this is budget for growth by a confident India.
Well, interesting. And Hiren, you want to come in and give me your initial thoughts, and then I'll have a set of specific questions for both of you, gentlemen. But what did you make of it? Yes, the markets have given a thumbs up, but what stood out for you?
See, I think this budget is not just about this year's fiscal deficit number and next year's fiscal deficit number. I think it's a strategic shift in thinking, in my opinion, right? I think all along, we always thought that the government was fiscally very conservative. And it's good to be conservative because you don't want to be profligate. But I think that, the government has used this opportunity to basically say that we need to now start growing the cake significantly. And if it means a higher deficit in the short run, it's great. And I think what I liked is not just the deficit number of this year and the next year, but the glide path that they have shown, that they're not going to be worried about the deficit up until 25-26. And believe you me, my sense is that this, if we do all the right steps in terms of divestment, privatization, if we actually go through and execute on some of these, your growth itself will be so fantastic that your deficit glide path will be better than what they have laid out. Because growth in a country like India solves a lot of problems. And I think that is something that this government has realized with this budget. So in my opinion, it's the philosophy of this budget that is more important than the numbers in the budget at this point in time. And I think secondly, they've opened up the floodgates of investment, whether it is domestic investment, whether it is foreign investment. And I think there are a lot of attention to detail in many small areas which will unclog the system substantially. And here I would like to quote George Soros's theory of reflexivity, right? That people always think that the markets will follow the economy. I think it's the other way around. I think now with the markets doing so well, you've opened up an avenue for companies to raise risk capital. So whether it is QIPs or IPOs or whatever it is, I think with a buoyant capital market, with no taxes, nothing to disturb the sentiment of the markets will take care of a lot of things. India is a capital scarce economy. And I think once you open that up, and the fact that government is thinking of asset monetization at a massive scale, and instead of having this socialistic redistributive policies of constantly taxing the rich to pay for the poor, I think the big philosophical change is that let's grow the pie significantly, let capital flow in, and growth will take care of a lot of problems. So I think we can discuss the finities of the budget, but to my mind, that is a big philosophical regime change in the way this government is thinking.
Yeah, and that's how I wanted to start this show with. Just talk about the big picture first before we get down to the minutiae. It's just that very interesting, the point that Mr. Shah made, and I didn't pick that up about the textile garment makers and the late night shift. And I think he mentioned too that there are a lot of small things which will help things. So let's try and talk all about that. But just before that, two big macro points. Though I think the markets have given a verdict. But if I can come to you for one of those points, do you reckon we've played is it an informed gamble of sorts with the rating pieces? Because my conversations with some of the foreign brokerages before the budget were announced seem to suggest that their conversations with rating agencies suggested that they would not mind if there is fiscal profligacy if it's coming for capital investments kind of stuff. So do you reckon, Nilesh Shah, that it's not a bad gamble to play at this point of time?
So Niraj, I saw a TEDx clip of an African woman talking about how Western world has actually done injustice to Africa. She said, we have resources, we have gold, silver, and you take our resources and then give khairat to us, and then you call us poor. In some sense, we have started accepting decision of rating agencies without questioning them. What are they rating? By definition, any sovereign's local issuances cannot be below AAA because sovereign has unlimited ability to print money. On the global debt side, our total debt and our total foreign exchange reserves, if you look at it, we are a company who has net positive cash balance. Reserves, including forwards, are almost $600 billion. And if in the debt we take out NRI deposits, because that's not really going to go out of the country, rating agencies are giving a bit near below investment grade rating to India, who has more cash on balance sheet than the debt. So why should we take rating agencies at the face value? Why not we question the basics of the rating? Now, subject to that kind of aggressive posturing, I think it's easily possible to engage with rating agencies that this higher fiscal deficit is for capital spending, is for growth, and it is in line with what other countries are doing in the rest of the world.
Yeah. Well, I think India has a chance to tell the rating agencies that look westward before you come and try and do anything tinkering with our ratings for sure. The other bit, Mr. Shah, is that do you reckon that the RBI will play ball as well? Because we have a fairly important policy in that sense coming up later this week. They've done a wonderful job thus far to a lot of people's eyes, and I think you mentioned this as well. What do you reckon happens next from the Reserve Bank of India's side?
So undoubtedly, RBI earlier was like Mahabharat's Krishna Bhagwan, managing the entire gamut of Indian economy, whose chariot had one tire of auto and other tire of tractor. And the horses were tied in all directions. So they were managing inflation, they were managing interest rates, they were managing growth, they were managing rupee, they were managing financial sector stability. These were all conflicting objectives, but year after year, governor after governor, RBI did a fantastic job. In between, we again experimented with this Western concept of inflation targeting, which is very noble in its objective. But the proponents of inflation targeting themselves abandoned it, whether it was Reserve Bank of New Zealand, the first central bank to introduce it, or the European Central Bank, or the US Fed. Now we are transiting again from RBI, who was managing like Krishna Bhagwan Bharat's Mahabharat, to Arjun with one focus on inflation. Now back to Krishna Bhagwan managing multiple objectives. And in this crisis time, RBI has done a fantastic job. Kudos to them in managing capital market stability. And Niraj bhai, I'm talking from personal experience. In April 20, there was a run on credit schemes of one particular mutual fund. It was likely to become exodus on the entire mutual fund. And RBI decisively intervened in just about 24 hours. That decisive intervention ensured that capital markets maintained its stability. So I have tremendous respect for RBI, and I believe they will do all that is necessary to manage this multiple conflicting objectives.
Hiren, just a couple of other things before we get to the minutiae, and I have about 15 odd minutes with both of you. Just one quick thing, and that is this focus on. It almost seemed as if the FM picked up the 3 or 4 sacks that needed to be attacked, or pods that needed to be attacked, and attacked them with vigor, right? Be it infrastructure, be it privatization, wherein I think the number is a bit lower than what the market was working with, but nevertheless, it seems that maybe it will be easy for them to do it if they play the cards right. And then on the bad bank front. So we'll come to the banks in the second part of the question, Hiren. Firstly, what did you make of those announcements? Do they kind of give the impetus that equity markets and risk capital and maybe even jobs have been wanting for so long?
No, absolutely. I think disinvestment, privatization, we've always talked about it, right? And I'm not too worried about whether the figure is good enough, small. I think you have to make a starting. And it's like this, once you jump into the swimming pool and you start swimming, then it comes easy. The fear of water, the fear of drowning goes away, right? So I think once we do 2 or 3 divestments, and I think they're very clear that they want to do it, right? And once you taste success, success brings more success, right? So I think this is the way I look at it, is that this is just the opening of the door. It's like tasting something. And once you taste it, I think once the government realizes that they can actually take resources out of the public sector and bring in capital, and they see the success of 2 or 3 of these transactions, believe you me, there is no stopping back, right? So I think we needed to take that initial step, and I think we've kind of taken that. But it's very revolutionary. Where were we talking about privatizing public sector banks? Today, we are already talking about privatizing 2 public sector banks and 1 general insurance company. Yes, these are the first baby steps that we are taking. Yes. But in my opinion, this is just the beginning. If we are able to execute on this, there is a long road ahead on this path. And I think, yes, they've focused this time rather than frittering away the political capital or frittering away the focus. They've gone and hit the most substantive buttons. And I think this should be a trigger for many such moves to come going forward into the future.
Yeah, well, nothing succeeds like success, and maybe this theory of reflexivity that you quoted, Hiren, might work for this privatization piece as well. Just one quick thing, Hiren. They haven't given out a number for or any details about how would they fund this bad bank, ARC, whatever you call it, right? In effect, it seems like that there will be ARC which will take in the bad loans of the NPAs of the PSU banks, and then you will privatize them. But the numbers not out there. Do you think those numbers will need to be substantive enough and details are required? Or would you go with the flow that it will be managed at some point of time when the need arises?
It's a complex issue, and there are several options available, right? I think what my understanding is that, and Nilesh bhai should add on that, is that they do believe that there should be an asset reconstruction or a management company, and then you may have 1 or multiple vehicles in which the bad assets can be transferred, and then you will have that ARC or the asset management company managing those vehicles, right? So I think today the numbers may not be very clear, but I think the path and the policy framework seems to be very clear in the government's mind. And I think I would take from what Nilesh Bhai said, that if you see, this is a new RBI which is taking quick actions. They are very practical. They are moving fast, and I have no doubt that they will, soon come up with the exact manner in which they would want to deal with this issue.
You want to add to that, Mr. Shah?
So, Niraj, our real problem is not the institution. Our real problem is execution on ground. Unfortunately, most of our economic crimes or economic issues are settled at the pace of 1992 securities scam. Cases continue, culprit die or run away, and assets remain frozen. Whether it was 1992 securities scam, whether it is ILFS, whether it's Divan Housing Finance, we have not been able to take decisions. Now compare that to General Motors in US during 2008. General Motors was a company where it was taught that whatever is good for General Motors is good for America. It went into bankruptcy, no shame. In 6 months, it was out of bankruptcy by restructuring. Workers' medical bill was cut. Workers' medical benefits were cut, including retirees, because the per car, the medical cost was higher than $500 or $600. It needed to be cut. It needed to be adjusted. In 6 months, it was done. Today, General Motors is back to business. We need to learn from US how to manage insolvency. We can keep on creating institutions, but unless until on-ground rule of law prevails, insolvency gets precedence in terms of solution, all these actions will not produce desired results.
Yeah, that's true. But you're not worried about the numbers not being there, etc. You think it'll figure. You think things will figure themselves out?
Undoubtedly, as Hiren Bhai mentioned, the RBI will work with the government to create appropriate structure. Capital is available in plenty in the world, which is full of liquidity and interest rates are low. Yeah. As long as you can give confidence to the investors that this return is worthy, capital will not be the limiting factor.
Got it. Okay, so let's talk about, we have about 8 minutes. So let's talk about a few interesting small things. Hiren, can I start with you on this one? You mentioned at the start of your answer that there were a lot of very interesting minutiae that was done as well. I think Nilesh Bhai talked about that one textile piece. I keep on repeating it because it kind of seems very interesting, and I wonder why I didn't pick it, but be that as it may. What is it that you spotted which was not the usual, but really stood out for you?
No, I think, for example, correcting a lot of the duty structures, right? I mean, I think if you look at, instead of just tinkering, I think this time the lesson in the changes that they have done in the duty structure is very clear. Bring down the import duty on intermediates, take the duty on finished goods up, incentivize Indian manufacturers to produce in India, right? And I think that is very, very important. And, there are several such things in the budget. I've not read the absolute fine, but from what I heard in the speech, I think, every small area has been, like, for example, fisheries, right? I mean, we might think it's not very important, but I think, tackling simple opportunities that are available. India has a massive coastline. We've never thought about exploiting it, to our advantage. Today, there is a government policy which is thinking of a sector where we can actually create employment, we can create a competitive advantage and a large export opportunity. So these are a lot of these small areas, whether it is in healthcare, whether it is in manufacturing, whether it is in agriculture. I think there are a lot of small things which have been set right to unlock the potential that is available.
Hiren, if you are an equity watcher, anyways, I think a lot of what the markets would do would also be dependent on what the global markets do. But is there solace here that the government is actually seeing, striking all the right notes that you would have wanted? And from here on, for the year, wherein we'll see economic growth, we'll see profit growth or corporate earnings growth, etc. Despite the valuation, would you be bullish post the budget?
I think so. I mean, undoubtedly, in my opinion. See, I think, yes, valuations are important, but I think global capital will go where the opportunity for growth and there is clear policy, right? And I think that is what this budget has established. And I think, yes, we should all be happy about what has happened in this budget, but I think that if we continue on this policy philosophy longer, there are a lot of things that we need to achieve, right? I think despite the valuations, I mean, let me give you an example. Why are people so excited about Tesla despite what the valuation is, right? Because people see that as a paradigm shift. They see there is massive growth ahead. And I think that I see a sense of self-confidence now coming into the way we are taking some of these policy actions. I think there is so much of liquidity waiting outside at the gate, and we just had to open the gates. And I think that's what we have done. And I think liquidity will flow. I think valuations, in my opinion, I think too much is being made out of valuations today, because you tell me who predicted that the Q2 and Q3 numbers will be the way they have panned out, right? And I think if you look at the projections that the government has taken for tax, inflows, I think they are very modest. I think they are very practical, right? And I am quite confident that tax revenues will be higher than what they have budgeted, because if India can produce double-digit EBITDA growth with a single-digit fall in top line in Q2, once growth comes back and operating leverage comes back, I think you will see finally an upgrade to earnings, and valuations, will be something that, yeah, I'm not saying there may be a few pockets where valuations may be slightly higher, but I think in terms of opportunity, there is a lot of capital which is willing to come in. For example, what they have done with REITs, right? What they want to do with InvITs. I mean, capital does not necessarily mean that people just come in and buy stocks. I mean, they're talking about putting existing toll roads and gas grids and transmission power lines. All of that is happy to earn a certain decent rate of return where interest rates are virtually zero to negative.
Right.
And that can, there is no question of valuation. In fact, their valuation is in our favor, that we will be able to give these global investors a yield that they are not able to see anywhere else in the world.
Yeah. Pertinent point. Okay, Mr. Shah, final question to you, really. I know from your Twitter feed that you've been denouncing almost any mention of the word bubble. Well, thankfully, I haven't brought it up at all thus far. My question to you is not about whether we're in a bubble or no, but as Hiren said, that he doesn't believe that valuation should be a problem because the earnings growth will make up for it. My question is there a case to your mind of maybe the valuation multiples themselves moving higher?
So valuations, if we look at the earnings trajectory, I mean, this year, this quarter, 102 companies' profit growth was expected to be at about 14%. It actually came at 32%, 18% higher, more than 100% higher. And now analysts have no option but to upgrade their earnings. And as they upgrade their earnings, valuations will come down. Will there be potential re-rating of valuation further from current level? Multiple factors will determine that. One, will interest rates come down further from current level? If not, then valuation re-rating will be a bit difficult. Will earnings growth actually accelerate further from current level? As Hiren Ved mentioned, that in September quarter, earnings came when 7% volumes were down. In this 32% earnings growth, volumes are down 1%. So in an era where sales are down, you are able to increase EBITDA margin and profit. What will happen when the volume growth becomes positive? Earnings growth could even go further higher from here. If earnings grows higher, valuation will get re-rated. So multiple factors will determine valuation, but this is a reasonably priced market. It is not a bubble. It is not an expensive market.
Don't accuse me. I didn't use the word bubble. But anyway, we will leave it at that, gentlemen. Thank you so much, Mr. Shah, Mr. Ved, for joining in today and giving us your thoughts. Really appreciate your time.
Thank you. Thanks,
And
Niraj.
yep, and viewers, thanks for tuning in to this episode, decoding the budget and the impact on the markets ahead.